The local bourse and the foreign exchange market have been shifting back and forth between gains and losses in response to the latest political events here. But overall, they appear to be holding steady. With more in Press Perspective today. Welcome to Wednesday's edition of Press Perspective. It's December 18th here in Seoul. I'm Min Sunhee. Pundits believe the risks surrounding the South Korean stock market have been priced in for now, while its foreign exchange market seeks to regain strength. For more on this, I have Sam Kim with Bloomberg here in the studio. Sam, it's been a while. Welcome back.
Thank you.
I also have Professor Song Soo-young at Chung-Ang University with us virtually. Professor Song, welcome back.
Yeah, thank you for having me, and good evening to you.
Right. Sam, we'll start here in the studio. Let's begin with the latest on the local bourse. What has been the stock market response to the local political events?
Well, ever since the martial law decree was announced on December 3rd, at least in the days following that command issued by President Yoon, although he retracted that later, the stock markets received a level of shock that they had not seen for a while. What happened in the days was at least tens of billions of dollars were lost in terms of market cap for the KOSPI and the Kosdaq markets. And that really rattled investor confidence in Korea's markets, including stocks, also the foreign exchange markets. You know, the won depreciated very rapidly to a level that Koreans had not seen since the global financial crisis. And the won losing its value against the dollar makes investors outside Korea feel that they have to pull more money out of Korea, which kind of added insult to injury there. And what's happened ever since was that there's been some political uncertainties that weighed on that investor confidence, although I think policymakers moved very quickly to ease those concerns by pledging what they called unlimited liquidity if necessary. So that's kind of helped stem the bleeding in the markets. And I think we've seen the stock markets coming back up quite well, although it's holding at a level where people feel it may not hold for too long. So nothing's out of the woods yet. Yeah.
Right. Sam, we've also been told that investors were already quite wary of Korean stocks, even way before the political turmoil here. Could you tell us a bit more about that?
Yeah, I would describe it as the stock markets jumping out of the frying pan into the fire when the martial law decree was issued. It was already having a tough time, given that the chip cycle was entering what they describe as a bust cycle, meaning that the memory chip industry that Korea relies on very much for economic growth was starting to see some signs that demand was weakening. Even though exports of semiconductors were doing okay year on year, the growth pace itself had been gradually easing, which was raising fears among investors that at some point the party is going to be over, right? But that was something on top of the worries that when Mr. Trump comes back to the White House, he would impose what he calls universal tariffs, meaning that Korea would be among the countries being hit by his tariffs. And given the fact that Korea is a very export-reliant nation in terms of economic growth, policymakers were very worried that it would deal a particularly hard setback to Korea's economy. So the stock markets were pretty kind of pricing in those worries before the martial law turmoil even began.
Right, and even well before that, actually, here, Professor Song, the Yoon administration had been talking about capital market reform, even before, of course, the hardships we're seeing on the stock market as we speak. What do you recommend to ensure productive capital market reform, Professor Song?
Yeah, primarily, we have a long history about the weakness of Korean capital market, dubbed as a Korea discount, since 1997, the East Asian economic crisis. So the major part were the foreign investors and why the Korean stock market has been discounted in comparison with the Taiwanese and the Japanese companies. So the point lies in that because of the structure of the Korean economy generally, so the corporate governance that is hindered by the cross-holding structures of many family-owned conglomerate. And our economy depends too much on the conglomerates, and as Sam has pointed out, that we depend too much on some conglomerates that export such as very advanced products, such as semiconductors and auto vehicles. So to that regard, our economy is very relatively weak in domestic consumption and domestic demand. So currently, in addition to that, in addition to the already existing Korea discount, one more very political and very uncertain area that could incur really serious investment loss due to such as war and some kind of the conflict between the South and North Korea. So that has been almost, at first I thought when I heard the martial law decree was announced, then I thought there was a war between the North and South Korea. So but actually it was committed by the incumbent president, and so it is an auto-golpe or self-coup d'etat. So that creates a really very dangerous and risky hollow for particularly for the foreign investors, and that could help the foreign investors come in the Korean stock market, and they would like to just focus on how easily, how quickly they can withdraw their money without any hindering. That would be the point, and that could add up an additional risk factor to the Korean stock market. So that is really bad for the Korean economy in light of the Korea discount, some plus extra Korea discount. So what I would like to say is to settle down and stabilize the political situation, resolve the current kind of some stalemate between the opposition party and the incumbent president. That should be resolved as quickly as possible. And expecting that, the reason why we have seen that the exchange of the depreciation once occurred very quickly, steeply in the Korean won against the US dollar, has been recovered, but still hovering around a much higher level than it used to be. So to that regard, that is still there is uncertainty and risk. And also, what I'm most concerned is how to recover the people's consumption sentiment, because this is the holiday season. And I remember Sam has just mentioned that if we give up going abroad because of too expensive the travel fees, but also, who can afford this kind of very Christmas season under this very uncertain and very unstable political situation? So one way to advise the Korean economy is to make sure people at least feel a little bit safer, but still we need to do something for the out of the woods.
Right, indeed. Right. Sam had spoken about surrendering plans to travel abroad this Christmas owing to the high exchange rate. And that being said, as you mentioned earlier, the foreign exchange market here, Sam, was very quick to respond to the political turmoil. And as Professor Song has also mentioned, the South Korean won continues to lose quite a bit of strength against major currencies. What, Sam, are analysts saying about the future for the Korean currency?
Well, it's not too bright at the moment. As far as I understand, policymakers, including the Bank of Korea governor, have expressed quite an amount of worries about, the won staying pretty weak, compared to what it was before the martial law decree was announced. Last time I checked before I was coming here, the currency rate stood at 14.35 won per dollar. It had gone up all the way above 14.41 per dollar in the days after the martial law turmoil. So, it's still pretty serious. And the reason this is really important to watch for is Korea is, as I've mentioned, a very export-oriented nation that has an open economy, very vulnerable to what happens abroad because it relies so much on imports for food and energy. At least 90% of energy that it uses comes from outside, meaning that Koreans have to spend their won and then exchange it for dollars to buy what they need. So the currency rate is arguably the most important indicator of how the economy would do. And, there are a lot of people who, travel abroad, who send their kids to school abroad. It just puts a lot of economic pressure on them. So it's very important that they try to, remove this concern of the political turmoil, which is adding, I think, almost unnecessary, an extra sort of weight in terms of the burden on the currency. So it's the policymakers' priority to be able to ease the political concerns that's weighing on the won.
Right. Professor Song, just like the stock market, the local currency had been losing strength against major currencies even before the political turmoil. Professor Song, how do you explain this phenomenon and what are the broader economic implications of a weaker won?
Yeah, as Sam has pointed very succinctly and to the point, I agree with his opinions. But what I will how to utilize or how to make the most of the weakening currency. Of course, this could be beneficial for the export. Clearly, as we have seen, according to the data for the past several months and the quarters, we have seen that the weakening Korean won currency could help make some net exports to grow. But the problem is President Trump, which will be inaugurated in January, and he has announced that he would make some broad tariff, and then the target countries is included. Korea is included as a target country. So that could be really the depreciation of Korean won could help to circumvent the obstacles caused by the tariff, 25% of the additional. To maintain the competitiveness in the U.S. market. But however, what matters, what I'm concerned most is because I do not agree with today's remark or in the Financial Times, the chairperson of Bank of Korea has announced that the biggest concern lies in that the export tariff imposed by Trump administration. But what I'm most concerned right now is domestic demand. I feel like it's very close to the deflation situation or liquidity trap, and the people begin to tighten their purse, and then consumption is contracted. That could make matters worse. And so, in order to overcome these situations, we need to do just to make a portfolio, particularly in make more export to China and Russia or other countries. And then with the help of the Trump administration, he announced that he is going to make some peace agreement between Ukraine and Russia and to settle down the international conflict. And not only, of course, in Syria and the Middle East. Then once that is accomplished, then the Korean market, as long as we can resolve and overcome these political obstacles, then the economy and the domestic economy is going to recover, and the consumption will return to what it used to be or better than. Then the consumption sentiment could help recover the Korean economy. And then even though despite the bust cycle of the semiconductor and some cycle in the U.S. market, I really look forward to some the earlier the Korean domestic demand is recovered, that could help alleviate the burden of the economic stagnation of the people.
All right, and staying with such efforts by the government, Sam, relevant government authorities here, they have a pledge to seek to address market jitters. And as you mentioned earlier, Finance Minister Choi Sang-mok has pledged unlimited liquidity to stabilize markets. How effective do you suppose have his words been thus far?
For now, I think the stock markets have kind of understood that it might work. And there's also a possibility that investors are buying the dip, given the stock markets were the sector that got hit the most after the martial law decree. But the won FX market hasn't really recovered to the level before the martial law erupted. Like I said earlier, I think the Bank of Korea and the Finance Ministry want to make sure that their pledge for what they call unlimited liquidity is going to be taken very seriously by markets. And in order to follow up with that, I think the Bank of Korea, as far as I remember, has spent about 14 trillion won that would amount to about $10 billion in order to buy what they call repurchase agreements, which is essentially a way to flush the markets with more money. And that's actually helped some of the concerns ease in terms of the market jitters. And then also the, today the Bank of Korea governor held a press conference where I was a little surprised to hear this explicitly said by him, where he said, the Bank of Korea and the authorities have conducted smoothing operations, which are a way of saying, yes, we are selling dollars in order to shore up the won. And it's quite rare for policymakers to be saying that in public because there's risk of the country being put on the U.S. Treasury watch list as a potential manipulator of foreign exchange markets. But then I think there's some understanding in the U.S. as well. This is an extraordinary situation for South Korea, and there could be more steps coming up, as long as the volatility or the lack of stability in the market continues, which the Bank of Korea governor has said that they would deal with enough steps to do that. So I think they're still struggling and fighting. What they see is volatility, and the most important thing for them is for the political turmoil to gradually ease down so that there's some sense coming back to the markets, and that's what they're looking for with the Constitutional Court now deliberating on the impeachment motion, with the parliament being more quiet, more or less after the impeachment ruckus that happened.
Right. Meanwhile, beyond the financial markets, Professor Song, next year's economic growth prospects for South Korea have been lowered to 1.9% by the central bank. Are we looking at perhaps a lower growth rate in the event of the second Trump administration failing perhaps to seek a truce between Russia and Ukraine?
Clearly, the Bank of Korea's chairperson's remarks about the 1.9%, which has been lowered much less than what was forecasted by the IMF and the other OECD. As far as I know, it was 2.1%. But because why this occurs is clearly because we know that the effect of the tariff was already known. And then what matters most right now is, as Sam has mentioned, that the unlimited supply of money is not enough to recover the consumer's sentiment. Clearly, it could deliver the signal that stabilization of the financial industry and also some kind of manipulation, despite the potential blame by the United States that manipulation or intentional purchase of the dollars to shore up the Korean currency's value. So that is may not be enough because of I think that the current situation is very close to the some liquidity trap. Not yet plunged into liquidity trap situation, but as far as I'm concerned, the Chinese market already fallen into some kind of recession. 27 months consecutive producer price index has been decreased, and the CPI has been decreased also. So the Korea is, for the past 3 months, the CPI has been, well, once it was reported stabilized, but clearly it shows some declining. And so this implies that in addition to that, we have experience of a martial law decree, and even though it was temporary. So this could make help dampen the economy, and then domestic demand is dampened, and this is really bad for restore the growth rate of the economy. So what I'm most concerned, and also the Bank of Korea chairperson should emphasize how to restore the growth rate. In addition to unemployment rate is 2.2%, that is low. Employment people is stabilized, but because they simply accept the low nominal wage. So real wage is weakening. That means in the future, the consumption would be further decreased further. So that could lead to some liquidity trap situation or stagnant or deflation situation of the economy. So to break out those vicious cycle, I really urge the Bank of Korea should not only supply the money, but also they should reduce the interest rate, but also to shore up the Ministry of Finance and the Plan, or they should offer some kind of very strong fiscal policy, even though the deficit is increased, because all other countries also do that, except US. Because only November, only the US economy prospect is good. All the other countries, including Europe, Germany, and all other countries, they try to reduce the interest rate and foster the growth rate of the GDP growth rate in the economy.
Right. Sam, Bloomberg recently published an interesting piece about the possible scenarios of Mr. Trump's tariff plans for different countries, I believe. What scenario can we expect for South Korea?
I read a report by the Korea Development Institute, if I remember correctly, as the source, which said that under Mr. Trump as president, Korea could potentially lose 0.67% of GDP because of the tariff plans that he imposes, and possibly another $45 billion in terms of export value if the tariff plans are imposed fully and the rest of the world retaliates against the US and there's competition to dump their products at cheaper prices on another. And that would make businesses and exporters very, very difficult for South Korea because, as Mr. Song pointed out, this is a very heavily export-oriented nation that relies on, selling stuff and global demand in order to have its economy expand. And, with Mr. Trump coming back to power, there's also concerns that he would try to roll back many of the subsidies that the Biden administration had provided for Korean chip makers, Korean energy battery makers, automobile manufacturers, including Samsung and Hyundai, which are really some of the biggest engines of the Korean economy. So there's a lot of concerns about it. And, on top of these concerns, we've just had this political turmoil that's making it very difficult to predict what's going to happen. And the Bank of Korea and the Finance Ministry have these headaches when, they understand that this political turmoil is just going to make it hard for the won to regain its strength. And when they start to stimulate the economy, what happens is that actually helps weaken the won further, because if you're putting too much money into the markets, what happens is there's too much of the won, meaning the won is going to get weaker, right? So it's just one headache on top of another for the policymakers, and it's just not a great time to work and live as a policymaker right now in Korea, given all the headwinds coming from outside and from within.
Right, it sounds like a great dilemma right here. All right, that's all the time we have today. Sam, thank you so much for your time and your thoughts. And Professor Song, as always, thank you very much for your insights.
Thank you.
Right, well, like I said, that is all the time we have for this edition of Press Perspective. We return same time tomorrow, so do join us then.